This paper was written by researchers from Australia, and they combined two models, a ResNet and an LSTM, to predict stock prices. And in that research, they found that if you use the close prices of the past 5 days to predict the close price of the 6th day, they found that the model was able to increase the ARR by over 20% for the two Chinese indices that they were testing in that paper. So it got me thinking, how does this perform on the Google stock? You know, Google, Alphabet, Gmail, Google Photos, that company. Step 1, get the data. I use the Yahoo Finance Python package. But we cannot assume that the Google stock will perform the same as the Chinese, right? If the Chinese was performing well for 5 days, what if the Google stock needs us to use 10 or 20? From the research paper, they did test out 6 different configurations of the length of days that produce the best results, and we're doing that too. And of course, we need a benchmark to figure out which model performs the best. And for that, we're going to implement a buy and hold strategy. Buy and hold just means you buy on date X, sell on date Y. And in this case, we'll be using 316 days. If you bought the Google stock on July 22nd, 2024 and sold it today, the returns are 32.62%. The best model needs to beat this. Step 2, the backtest rules. The paper does give this, luckily for us. So the rules will be, if the model predicts a closing price higher than the current threshold, we buy. Once we're in the buy, we get out when the model predicts that the closing price will be lower than the threshold. The original paper used 1%, but we like to experiment, okay? We're gonna use more thresholds. So here are the changes. We're gonna experiment on different days and different thresholds. Drum rolls, please. So I'm looking at the 3-day test. And it went really bad, to be quite honest. We actually didn't get any signals for 3 days. For the 5 days, the plots for the data the loss plots look way better than we had before. But from that data, it seems that we should have probably stopped at around the 35th epoch. So looking at the results, that didn't work. That didn't beat the buy and hold. But we can see that it was at least positive, so it's not a bad thing. It was at least positive, so that's a good start, hopefully. Let's look at the 10 days. And things kind of went downhill from there. After day 10, there is a clear case of overfitting on all the other models. So in conclusion, just like the original paper, 5 days was the best parameter to use, but none of this beat the buy and hold. I'm gonna test this for more stocks, so follow for more.